What is happening to mortgage interest rates? Hi, I'm ReAnn Gonzalez with Edge Home Finance, and today we are going to look at what has happened with mortgage interest rates this year. If we look at the last 50 years, then we are approaching the average interest rate quickly. The average rate over the last 50 years is 7.7%. Let's take a look at this chart where we have mortgage interest rates from August 1972 to August of 2022. In 1980, rates jumped from 12.83% in January to 16.33% in April. September and October of 1981, rates went up to 18%. This was the worst year for mortgage rates on record, and rates stayed above 10% until October 1986, where it dropped to 9% for 6 months, then went back up above 10% until December 1990. So let's look at this. We had mortgage interest rates above 10% for 10 years. As you can see on the chart, mortgage rates continued to drop below 8% after 2000. I remember when rates dropped to 6%, and everyone was thrilled, and people used to say, "We will never go below 6%. And then we were hit with the COVID pandemic in 2020, and rates fell to record lows in 2020 and 2021. How many of you thought that real estate was going to come to a halt during the lockdowns? It surprised many of us how the real estate market took off, and we have been running a marathon since then.
Recently, the Fed hiked the Fed funds rate by another 0.75%. This was the 5th rate hike of the year, and the Fed also projects hiking another 1.25% this year, which may mean another 0.75% hike in November and 0.5% in December. Remember, the Fed funds rate is the overnight borrowing rate for banks, and it is not the same as mortgage rates. But you may be wondering, how does this move in the Fed funds rate affect mortgage rates? Mortgage rates are primarily driven by inflation, which is at a 42-year high. When the Fed hikes the Fed funds rate, they are trying to slow the economy and curb inflation. If the Fed is successful in cooling inflation, mortgage rates should decline. History proves this during rate hike cycles for the past 50 years. But if the market doesn't believe the Fed can get control of inflation, we could see more volatility in mortgage rates.
So what do we do with these higher rates? We continue to keep a positive mindset and adjust how we do things. When I first began working in the mortgage industry, rates were 9%, and we still helped consumers purchase homes. It is kind of like fashion. Some clothes and loan programs make their way back around again. Back in the day, we did a 2-1 buy downs to help the client struggling with the higher mortgage payment. This allows us to get them into a home today with today's market prices versus a higher priced home in the future. So you might ask, what is a 2-1 buy down? It is a mortgage loan option where the seller or builder reduces the homebuyer's interest rate for the first 2 years of the loan. In year 1, the interest rate is 2% less than the original locked-in rate. In year 2, the interest rate is 1% less. So for instance, let's say based on today's government rates of 7% for a 30-year VA rate, with a 2-1 buy down, the client would start out with a payment the first year at 5%, and then the second year would adjust to 6%. And then the third through the 30th year, the rate would adjust to 7%. This allows the payment to gradually increase over a 2-year period. As I mentioned earlier, the cost of the 2-1 buy down does need to be paid by the seller. So if you have listings, you might want to begin chatting with your sellers about possibly looking at paying for a 2-1 buy down for the new buyer versus dropping their list price, as we are most likely headed back into a buyer's market. Most of the U.S. has been in a buyer's market the last couple of months, And I believe this is going to push us back into the buyer's market. We do not know for sure how long we will be at these higher interest rates. Some economists are saying next year they'll lower. As the rate chart showed us, though, earlier, at one time we stayed above 8% for over 13 years. So in the meantime, we must adapt. We are all in the same boat, and some of us will thrive during these higher interest rate times, and others will fall victim to it. Don't be a victim, be creative, and keep your mind right. Mortgage transactions, especially right now, are like puzzles, and every client and transaction has different pieces that need to be matched and put together for the final closing. This is what I love to do. So please watch more of my YouTube videos where I provide mortgage tips. And as a huge favor, I would really appreciate it if you would hit the like and subscribe button below. And as always, if you have any questions and want to chat about your situation, please feel free to reach out to me at 915-478-1157 or apply at my link listed below. Thanks and have a great day. Bye.